Good morning everybody, it's Chris here from Serene Education with the 4 Majors Analysis Update for the 6th of June 2011. It's going to be looking at our 4 Majors this morning on our CTC strategy template. Let's start with the Euro. Okay, you can see Friday's candle, up candle from the previous, and what it's done is it's taken us above a prior swing and a prior resistance level at 14,400 and moved higher, and we've seen here really push off now. We had a slight pause intraday at a previous support and resistance level at the 14,500 mark, and then Friday just saw a huge takeoff. And Asian market trading, we've seen a slight pause, not much of a trading range, but definitely on its way up to the highs that we've seen at 14,500 and 14,8550 to start with, and topping out at 14,9500. So the long-term lookout for this pair is definitely upside. You can see swing high, and pushing higher than all the moving averages, and very, very solid bounce for euro against US dollar. So ultimately, should be looking for further upside movement. You can see 4-hour chart breaking well above the all-important 200-period moving average recently, and as I mentioned, upside movement confirming a bullish trend. Swing highs, high, yep, and as we've seen, I topped out. So our trading range, you can see that the support level is sitting around the 14,300 mark, so that'll be our support for this pair. So if we look at the hourly and the 30-minute, there we go. You can see the hesitation. We'll take it down to its lowest level. So 14,600 would definitely be the support level for this pair. You can see support yet again. However, look at since posting the high, we've seen price slightly giving us lower swings. But ultimately, if we can stay above 14,200, and we can see a push higher than that during the course of today or the week, then we can definitely see further upside moving towards that 14,800 or 950 market long term. So look for a break higher than 14,660 ultimately for further upside movement, or a break below that. Then we'll definitely see a consolidation taking place. Then we should look at possible points to the downside, roughly 38.2 at 14,500, 50% at the 14,5600, 61.8 at 14,5400 mark. And as we had some highs prior to the breakout, I guess these could come into effect if price failed to find support at this level here, and we could be looking at roughly the 38.2 being an ultimate resistance or support level in the near future if price had to break below that level. So we could be looking at roughly the 38.2 mark being a target, or the 50 period run the 1455 mark for this pair. Next pair up on our CTC strategy template for the 6th of June is sterling against US dollar. Let's have a look at the daily time frame. You'll notice that we've had a pullback since the high that we saw in 1675 in early May, and we've had that pullback extending way down to the 16,1500 mark or 10, and then we've seen price bounce to the upside. Now in doing so, it's broken above the small time frame moving averages, and we've seen a pullback, and support has been found at this level. So the pullback has come around the 38.2% mark, and we've seen price move to the upside. And now on the Asian market and European session open, we've seen price now trading in an indecision candle, but still higher than the close we saw on Friday evening. So if all bodes well, then we should be looking for the top end of the previous high here at 1651.20 as our next target for this pair, as it remains to be seen. A close higher than that would definitely see extensions way up to 167500 being a possibility. If we look at the fib projection levels, then we should be looking at this being the 50%. You can see the price is now trading just slightly higher than 23.6% fib area, and 100% will take us well above the 167500 mark. So intraday, look for further highs as long as price can remain higher than the 1643.70 mark. So if we look at 30 minutes, 1643, there we go. So it needs to be trading higher than that, which is now doing as we speak. We've seen a slight pullback on that, but it's trading well above the 200 period moving average on the 30-minute time frame, and we've had prior support on 2 occasions at 1641.50 at this level, and if we can trade above the high of this, then we can definitely see extensions higher. You can see the CTC is extended for high blue across the board on our CT, which is great. Here again on an hourly chart, you can see the extension higher. Moving averages all evenly spread out, and the CTC is in our favor. So ideally want to see a close higher than the previous candle, giving us indication for further upside movement. We don't want to see price trading lower than the previous support area around the 1641.50 mark. Break below that would definitely confirm that we're in a consolidation, and we should be seeing further consolidation to the downside. Then you look at your fib projections as possibilities, either 38.2s or 50%, 61.8s. Ideally we want to see price trading higher than it currently is at the moment now, testing the higher end of this close higher, and that would definitely see price trading above the previous high on Friday, and by doing so confirming further upside movement, and we should be looking for long-term targets to the upside. So as it stands on the daily, you can see that the major trend is still to the upside and the intermediate is down. We've had a lower swing from the prior one, so this is our intermediate swing now, and you can see the price is testing that intermediate. Failure to break higher than the intermediate trend will definitely see price reverting to the downside in the squeeze range, and this will just be a failed reattempt. So very, very important. We need to see a break higher than the trend line, ideally a close higher than that. Then the 1645.50 mark would definitely give us a confirmation that we're probably going to see further extensions higher. Failure to do so this week would definitely confirm that we're seeing a resistance level at this area here, and we could see price reverting to the downside in the next couple of days or so. Next up is US dollar against Swiss franc. Yeah, we're seeing the US dollar lose ground against the Swiss franc. Very much in a bearish trend. The major trend is definitely still to the downside. Notice the CTC is well extended to the downside, and we've had breakouts and pullbacks along the way on this pair. I'm just putting them really quickly so you can see them. We have breakout, pullback, break, and then breakout, pullback, continuation, breakout, pullback, continuation. So you can see just recently the move is definitely being a lot stronger than the previous ones. You can see the extensions on these. Here, for example, there's another one there. This is pretty much how you do it in real time, really quickly. Swing lows, swing highs, breakouts, swing highs, swing lows, breakouts. That's exactly how you trade. And you can see this one here, breakout, pullback, continuation, pullback, and that's what it's doing, exactly the same thing. Friday definitely saw further downside movements after the shoddy NFP non-farm payroll figures that came out, really bad for the US, and we saw a sell-off in Swiss franc and the US dollar against Japanese yen, and we saw euro and sterling gain ground against the dollar. And you can see now, as of Asian market trading and going into the European session open on Monday, the 6th of June, we've seen a slight trading. You can see on an hourly chart, for example, after the breakout, price has pretty much just gone sideways. There we go. If I can put in the break of resistance, ceiling level, resistance, 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 watch for the breakout, pull back, continuation in the direction of the trend. It's that easy, guys, to work out. There we go, 100% is roughly around the 830 mark. It's trading the underside of the 61.8 fib projection level of this initial move, the consolidation in the second move. If we see a break of 8330, then we're definitely looking at 8300 as a first target for this pair. Notice the moving average is not all evenly spaced out, and the CTC is well extended to the downside, confirming bearishness for this pair. There's the major trend on a hourly chart. So look for a break and close lower than 8330 for further continuation to the downside. Failure to do so, we could see the trend coming into play at roughly the 8350 mark for this pair. Failure to break higher than the trend line on an hourly chart would definitely confirm further consolidation to the downside. This is the previous breakout level, so put that in. So still trading below 83900 as well as a trend line would definitely confirm further downside movement for this. Last pair of the day is US dollar against Japanese yen. Let's have a look at the daily. You can see sterling losing ground against its Japanese counterpart and reattempting the 80 mark, which we saw not too long ago at the early part of May, and you can see the lower swings dictating movement, trading below all the moving averages, and the news non-farm payroll saw price break below the previous swing, in this case support area, and we're trading below it. We saw a slight pullback over the Asian session, but you can see that price has reverted to the downside, and we're trading at the lower end of the range as we move into the European session open. So as it stands now, we should be looking for shorting opportunities, 80 being a definite target for this pair. Break below 80 would definitely confirm that we are still very much negative, and pretty much overall this pair is trading at an all-time low that we saw back in early mid-March, but we're typically heading towards that. If I look at a monthly chart, you can see where we've come from. There we go. I think the high we saw at 99 levels, even further back 84, so you can see where price is now at the moment, now losing a lot of ground against its yen counterpart, significant amount since the mid 2007, and you could see the extension to the downside, the pullback, and now it's trading roughly at the underside of the 100% extension of that initial move that we saw in 2007, which is not all that good for this pair. So however, if you look at it, the longer it goes sideways and it can use 80 as a potential support area, then there's a good likelihood that we could see price bouncing. So if we see a trade lower than 80, then we're definitely confirming that there's more downside for this pair to come about. So not looking good for this pair as it stands now. We've got to see a definite attempt to get back up against the 8250 above the institution, try and gain some strength, but the way the US dollar is going at the moment now, not a lot of conviction for the pair, so it'll be interesting to see what happens in the next couple of weeks or so for this. Otherwise, you could be looking at the lows that we saw before the intervention. So intraday, 80 would still be our initial target. However, you can see that the US dollar has found a slight. You can see that the downside momentum has kind of slowed down, and we had a slight consolidation range, resistance, 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 resistance at this level. It's now attempting it prior to the almost the breakout. So failure to find support at this level here and push higher, won't see the price trying to gain another upper strength or gain some sort of momentum to the upside. You can see the major trend for the hourly chart is still negative. Moving averages, it's testing the 20-period moving average as we speak, but the downtrend, swing low, swing low, swing low, swing low, swing low, is still negative, and we're still moving lower. The small intermediate trend was likewise, and it's just broken that. Now if you can find support above this little area here, then we could definitely see price consolidating. And if we can consolidate and to at least it needs to break above this trend line straight away in order to show a bit of conviction. If it fails to do so, then obviously what we're still doing is just seeing a pullback in this negative breakout and a further downside movement. So ideally break above the trend line, which will take it above the 80.55, at least above the 50 period moving average, which is definitely required in this case to see any attempt of becoming a bullish trade. Otherwise, you're seeing consolidation. It's now testing that, and as long as it's consolidating below the 80.55, then we're not going to see any upside movement for the latter part of this. That's it for today, guys. Hope you have a fantastic trading day. Keep it simple. Have a look at the news announcements today. See if there's anything really that's going to move the market. Looking at things quickly this morning. What do we have? Canadian, 1:30 p.m. GMT. We've got building permits month-to-month figures coming out. They're expecting a negative forecast. The previous forecast was 17.2%, and they're forecasting negative 2.3%. So building permits for month-on-month for Canada, if it comes up worse than that, you're going to see a huge sell-off, and probably a good opportunity for the US dollar to strengthen against its counterpart. CAD, we got PMI results. Then we got a couple of speakers stateside talking. Treasury Secretary Geithner and FOMC member Fisher speaking as well. So not too much news European-wise. We've got PPI month-on-month figures for Europe at 10 a.m. GMT. They're expecting a slightly higher figure of 0.1% over the previous figure of 0.07. So not too much news, but nonetheless, keep your finger on the pulse and make sure that you trade correctly with the right money management rules, and most importantly, you trade serenely.